This was a very important post that I saw this morning that I wanted to make everybody aware of. What it said is Bitcoin future traders are mostly retail. This is data from Crypto Quant. And what it said is the average order size fell to $2,000 from $6,000 earlier this year. Now, it sounds just kind of random, but it's actually very important. It's very eye-opening, and I want to take you guys down the rabbit hole that I went down. But I also want to talk about this in relation to ADA and what this means for the rest of this year, what this means into 2026. We'll discuss all that and more in this video. So again, if you guys are new or haven't already, show your support for the channel down below. Hit that subscribe button, that bell. It's free to do. It'll keep you updated anytime there's new content live here on the channel. So I can see a lot of people are in a sentiment position of this. It says the more hate ADA gets, the higher it will pump. The amount of people bearish on ADA lately is skyrocketing. Q4 is going to be fun. And yeah, I agree. A lot of people I think have been unfairly bearish against ADA. We're very clearly setting higher highs, higher lows, higher highs, higher lows, and we're making these big steps to the upside. Obviously, we'll talk about Friday here in just a moment, or this last Friday. But what we're seeing is the market go through some kind of organic growth. We have not seen new retail return to the market yet. That's the big thing that I've talked about time and time again that's been missing. And it's why we haven't had our traditional alt season. It's why we haven't had our up only season, the time that people usually get euphoric about. So what we've seen a lot of in this market cycle is people, retail, try to do too much, get impatient, and try to force the market. The market rejects that move. And then you see these large entities take advantage of the dips that we get in the market. Then we rinse and repeat. That's what 2023 into 2024 was. That's what 2024 into 2025 was. And here we sit going through this same thing time and time again. So here's what I want to show you guys. Why this is so important is if we look at what trading has looked like this year, specifically the last 5 months or so, it has been dominated by retail. This is actually the longest continuous period we've seen of retail leverage trading in history. All right. So you are seeing the impatience show in this metric. And yes, we have seen big entities slow down at this time when it comes to leverage. And that's not really surprising. In fact, when we look back at the normal trading, which would be like your mid-size wallets, they've kind of slowed down since May. Take a look at these small whale orders. They've slowed down since, go figure, May. Big whale orders have slowed down since May. So a lot of what you've seen here in 2025, specifically the last 5 months, but also from basically late January through to the start of April, is retail just getting impatient, and trying to make something happen. That does not work out. All right. That has never worked out for retail. It's probably not going to be the case again. I mean, I guess we could say that retail got kind of lucky back here in March of 2020, but obviously we went through one of these catastrophic drops in the crypto market and everybody saw the opportunity that was there. So what we've seen during this time is large leverage has slowed down and they've been buying spot, like we've talked about, institutional money, whales, all loading up throughout 2025, not surprising, while retail is basically gambling. Okay. They're trying to force things. They're trying to make it happen. Maybe people have smaller amounts of money and they're trying to capitalize on that. Unfortunately, retail sucks at leverage trading. And so what they do is they either over leverage themselves or they open up positions that are way too close to price or they don't understand technical levels. And that's why retail gets liquidated. And what's interesting about this is that when we look at this year, this has again been some of the larger periods of retail leverage trading. It's also been the time that we've had the largest liquidation events in crypto history. Coincidence? Probably not. In fact, when we look back throughout history, and you guys can look very closely at this chart, I was looking at these liquidation dates during all these periods where retail concentrations were high. That is when we've had some of the largest liquidation events in crypto history. Go figure. All right. So retail right now is trying to do too much when they should in fact be stacking spot. Now, again, this isn't financial advice. People can do whatever they want. And here's the silver lining to this. And this isn't my positive spin. This is something you can look at this chart and very clearly see. Retail has been a big orchestrator of a lot of these drops because they suck at leverage trading. But when we get down to some of the ranges like we're at currently, what tends to happen? The big entities step in because they've bought spot, they've built out their positions that they plan on holding for a while, and then they start to do their own leverage trading. However, they do it successfully. And what this tends to lead us on is some of these big extended rallies throughout the crypto market, whether that be the normal waltz, look at that, they tend to move up into the right, small whale orders up into the right, big whale orders up and to the right. It's not a surprising thing. So what we're waiting for now is some of these big flips to take place in the space where basically they've decided they've accumulated enough spot and they're going to start opening up these leverage positions, which like we talked about yesterday, we may be amidst that bottom. We may be at this point where we're again getting ready for this next slingshot to the upside. Some people disagree. That's fine. But what we are seeing right now is basically this major bearish sentiment in the market, which is a huge bottom signal. We're seeing most things oversold right now, which tends to be a huge bottom signal. And we're starting to see even some of the people who had been major bears in the market starting to paint a little more bullish of a picture. And what we're again still waiting for is obviously the big retail surge in the market, but we're at the same time seeing all this supply throughout the space just removed. And so it's all coming together perfectly, but the biggest problem is that people are just so impatient, they're not letting it happen. All right, they're trying to do way too much. And that's why I say sometimes you just need to sit on your hands. If you don't know what you're doing, just be patient, just wait, and let the market go through its cycle. All right. Now, when I say go through its cycle, I'm not talking about the 4-year cycle. I'm talking about a growth cycle for an asset. We're on the verge of mass adoption. You're seeing big embrace take place, and people want it to happen now. And that's exactly how people mess things up. But what I will say here is we are going to have some chop. There will be ups and downs. Even today, we're seeing some ups and downs in terms of price. We've seen things rise. We've seen things fall. And the market is just obviously trying to get its feet under itself. We're trying to create this next extension here. But guys, these are things that retail is not going to be turned off to crypto forever. There is going to come a point, like I've said many times, there's going to come a point where the large entities are going to market and push to the masses in such a big way that they're almost forced to use crypto, if that makes sense. But I wanted to share that with you guys. What does this mean for ADA? Does this mean that, we're going to see a massive boom today or next week or next month? No, not necessarily. It tends to kind of come out of nowhere. We do tend to have these events take place right before times get exciting. That's what I will say. But again, don't be in a hurry. I see so many people setting timelines for themselves. Guys, the market moves at its own pace. It moves on its own schedule. It's not going to do things in the exact order that you want. And we've obviously found that out many times in this market cycle. But that's what I wanted to share with you guys. So it's very clear what has been happening. And the biggest thing I will say time and time again is you got to have patience and let things just happen in the market organically. So appreciate you guys as always. I hope you enjoyed the video. Let me know your thoughts below. But excuse me. Have a great day. Catch you guys in the next one. Take care.